Hello everyone, Hutan here. In today's video I want to talk to you about the new mortgage rules. The new stress test is here as of June 1st. That's additional 0.25% on the qualifying rate, which will reduce the buying power by about 4.5%. This was first introduced for uninsured mortgages, means the mortgages that have 20% down payment or more, but then later on government also implement this rule for insured mortgages as well. So this is an effort by the government to slowly walk back the market and try to slow down the market by not doing too much and not disrupting the market too much. So what is the purpose of the stress test? Well, the stress test was designed to tackle the household debt issue in Canada and prevent Canadians from taking on mortgages that are too big for them. As a matter of fact, average Canadian household is indebted about 170% of their disposable income. So that means that Canadians owe $1.70 for every dollar that they earn after taxes. So in order to pass the stress test, you need to qualify at your contracted mortgage rate plus 2% or 5.25%. That was a benchmark rate for uninsured mortgages. So for example, let's say you go to the bank and the contract rate that the bank is offering you is 3.5%. So your lender will assess you as if you were paying 3.5 plus 2%, so 5.5% on your monthly payment. So because they use 5.5 because it's bigger than 5.25, so they assess you either at 5.25 or your contracted rate plus 2%. So how can you be prepared for this? Since lenders look at your gross debt service ratio and total debt service ratio, it's important that you're aware of all your expenses when you're applying for mortgages. This could be your personal loans, credit cards, car payments, student loans and all that stuff. So, and in order to get ready and better and qualify for the stress test, it's important for you to pay down as much loans as possible, especially the ones that have higher interest rates, such as unsecured line of credit and credit cards. You can also look into other type of lenders such as credit unions that are not federally regulated, they're only provincially regulated, so they do not have to do the stress test. With this way you can get qualified for a bigger mortgage amount, but the contracted interest rate will be a bit higher. As I mentioned before, this is an effort by the government to cool off the demand in housing market and slow down the growth. Will they be able to do it? To be honest, I'm not sure, because as the government was changing the stress test, some banks are changing their debt to service ratio qualification for uninsured mortgages to still match what it was before. So essentially what the banks are saying that some banks, if you have 20% or more for down payment, we can still qualify you under the older rules. And this is because for banks, somebody that is paying 20% or more consider lower risk than someone is paying less than 20%, even though they're insured by government. So essentially what's happening is the people that have more money will be able to get more loans, and people that have less money won't be able to get loans. And this is further widen the gap between the people that have money and people that don't. And governments are trying to do a lot of things, right? The inequality is a big topic of conversations among all developed countries, and they're bringing these policies to change this, but usually it doesn't work and it backfires on them. For example, some people are saying that okay, they're gonna increase the interest rate, and what's gonna happen then? Then some banks will extend the amortization. So like amortization is the period that you pay off your loan. So your monthly payments will remain the same. Because think about it, at the end of the day, banks are in the business of lending money. So any new rules that come out, they will try to work around it to lend you money, given you are qualified, you have good credit score, you have good income and all that stuff. Still, banks are very tight here, so you need to go through a lot of qualification to get loans, but at the end of the day, banks want to give out loans. So these are the things that are happening, and we'll see. I mean, the government may bring more policy changes to curb the demand, but for now we'll just monitor this and see how this is going to impact the market. Essentially, it's reduce everybody's buying power by 4.5%. And then we're going to be monitoring it and see how it's going to change the market. But if you have any questions about how to maneuver the stress test, how to get loans, how to get pre-qualified, you can get in touch with me. I work with a team of brokers, qualified brokers that do loans and get mortgage qualification for people like 10 or 20 a month. So it's easy for them to just look at your application and just give you that, okay, you can get a loan or not. But give me a call, send me a message. I'll be glad to help you out and walk you through the process.